Welcome to the Airbnb Roadmap, the podcast designed to navigate you through the entire journey of short-term rental success. Whether you're just starting out or ready to take your hosting game to the next level. My husband and I became super hosts within just months of launching our first Airbnb and have proudly kept that title ever since. With over 350 reviews and an overall 4.95 star ratings, we picked up a hack or two I'm excited to share with you. In each episode, I break down the strategies, insights, and industry secrets that set profitable short-term rentals apart. From choosing the right property, understanding local regulations, and obtaining your listing to go beyond just the basics. I'm here to share everything you need to succeed. So if you're ready to map out your path to Airbnb success and unlock the full potential of short-term rentals, join me on the Airbnb Roadmap. Your journey starts here. Hey, I'm Brittany Wenninger with Porch Realty, powered by Real Broker LLC, and today we have a very special guest. This is Carrie Richard, and she's actually one of my best friends. I met her when I purchased my second property. And it was one of those things. I was going around to the neighbors, and Carrie was literally walking into her house, and I was like, oh, hello. Like, I was like the weirdest person ever, and pretty much just asked her if it would be okay if we changed this cabin into a short-term rental, and she was way too cool about it. She invited me to her home, like inside her home, and in my eyes, like, I'm from Madison, like, you know, this city, and I'm like, God, like, people don't do this. Like, this is kind of like an up north thing. And met her husband right away and all that good jazz. And she was just so super nice. And we have done a lot of shenanigans together, like a lot of shenanigans. Right when we met, we just kind of became besties, which I feel like you're my best friend. I don't know if, you know, it's the same way. I don't know.
I'm letting you yap by yourself right now.
Carrie owns Booked. This is a accounting and tax firm. It is fairly new, but it took off like crazy. So, Carrie, do you want to kind of talk about who you are and who Booked is?
Yeah. Thank you so much for inviting us on the podcast, by the way. It's so fun to have like startups, business formations, and working with a lot of short-term rental and real estate investment people as clients. I think we're a great fit, and it's really fun and exciting thing to be part of this podcast. So again, I'm Carrie. I'm the owner of Booked, and we launched to prioritize small businesses and startups that typically felt left behind by these bigger CPA firms, and not even large firms, even mid-sized or small local firms. They take on these client bases that are so large that the small businesses and the individual investment clients typically were getting extended. So we kind of found that niche and fell right into it. And that's where a lot of our clients come from. For services, we provide full service accounting, payroll, taxes, business formation, basically anything you could need or want as a small business or an individual that's reaching into something new like a real estate purchase. We can help with any of that. And just straight out the gate, all of our communication is free, whether you're a client or not. So if you're working on something or have an idea or a question or anything, you can text us at 608-492-0260, reach out on our website, email me directly. We will get back to you within 20 minutes is our typical response time, because we believe that everyone should have access to information and knowledge on their questions. So that's kind of where we fit into this client base. And it's been pretty ideal for short-term rental hosts and small, tiny business owners, so that we can handle all their numbers, so that they don't have to pretend to be an accountant.
Yeah.
And the other major thing about our firm is we're price transparent. So we won't bill you for a lot of services that we do provide you straight out the gate.
Carrie, can I tell you a quick story?
Yeah.
About like the whole transparency thing. So our CPA, oh my gosh, I'm not even gonna like say any company names or anything like that, but he needed access to our QuickBooks, and he sent us an email saying like, hey, can you give us access to the QuickBooks? I'm like, yeah, for sure. Gave him access. Everything was all good, right? Well, when it came to the tax time and we got the final bill for them like doing our taxes, I saw that it was like way higher than normal. And I was like, WTF, why are we paying like all this money? Like, I feel like every single year it increases the price for like their services. So I called the guy, and like it's a tax firm. It's a big firm. Called them. I was like, hey, like, why is our tax bill, not tax bill, but like the service bill so expensive? And they gave me a breakdown. And this guy, oh my God, he charged me $58 to email me asking access to my QuickBooks. And I was like, are you kidding me? Like, I was so pissed. And I even told the guy, I was like, what, are you going to charge me for this phone call too? And he was like, I was like, no, you're not going to charge me. Like, this is a customer service call. Like, don't charge me for this. Like, I was so pissed.
And so the fact that's a common situation and a common scenario. And let me just put this out here. Yes, your accountant does need access to your QuickBooks. We do need accountants only access.
Yeah.
Where it's different is Booked doesn't charge for any of that. We don't charge for onboarding costs. We do all of that as part of your accounting subscription package or whatever you're signed up for services with us. That's it. Whatever is, if it takes us 55 hours, that's on us for not billing it out correctly straight out from the gate.
And I love that. Like, you are gearing it toward the people that, like, you know, $5 is $5, $10 is $10. Like, we can't just like keep on spending all this money just for an email that the accountant sent us, you know, like that drives me nuts. So I love that you are so transparent about, you know, the prices and transparent about like, hey, we're not going to charge you for these silly customer service calls and onboarding too. Like,
and just last week we had a client where his credit card processor was stealing basically a bunch of money from them and withholding it to keep for themselves for no reason. Well, this was a huge win for us because we went in and was like, hey, that $50,000 is this client's sales revenue. And so will I bill that client for any of the work that we've done on his case? No, not until he gets those funds. We're not going to shit on you when you're down, okay?
Yeah.
We're here to work with you, pull you out of the shit, whatever chaos you're involved in, whatever accountant you currently hate. We're here to get you onboarded and a seamless transition, figure your stuff out, and then we can talk after the fact.
Yeah, no, I love that. So since this podcast is all about first-time investors with Airbnbs, what is the first step that they should take with bookkeeping? Because that's something that no one really thinks about when it comes to purchasing an Airbnb, is that like, yeah, you have to put the furniture in there, you got to put the wallpaper, paint, like make it all pretty. But no one thinks about like the actual bookkeeping part of it. And that's a huge portion of it. Like, I'll admit, like my husband Clay, he does all the bookkeeping. I don't do anything. Like, he does not trust me with the receipts. It took us so long to just get like a rhythm of like, hey Britt, you got to save your receipts. I'm like, oh, do I have to? Like, I want to. So it took us really long to just do that. And a lot of fights happened from that because he's like, oh, where's the receipt? I was like, I don't know, Clay. I don't know. So he does all the bookkeeping. Do I know anything about bookkeeping? Absolutely not. The only thing I know is that I have to keep my damn receipts now, or else he's going to get mad at me. So what should first-time investors really do for bookkeeping and kind of like start them on the right track?
Yeah. So my husband, same thing. He owns his own business, and it was that you have to do your receipts. So now he has a rhythm where anytime he's buying like supplies or material for the business, at the checkout counter, he takes a picture of the receipt and emails it to our business account where it goes into his QuickBooks and automatically
you guys told me that. So when it comes to Carrie and her husband's Orlando, Orlando and I are the same people, and like Carrie and Clay are the same people. So even like when it comes to boating, Orlando and I, we are the passenger princesses, and Carrie and Clay, they take the realm. So
we're the captains.
Yes.
Okay, so you've heard us already throw around the word QuickBooks, and that's a really intimidating software a little bit. If you're just a baby beginner, it's your first short-term rental, don't feel like you have to jump right into a QuickBooks subscription. If it's your first rental, open an Excel spreadsheet, keep a document folder with all your receipts. It doesn't have to be this big ordeal, which we'll get to software and the specifics of it next. But the thing I would say for first-time investors when it comes to bookkeeping is just keep your finances completely separate from your personal to your real estate stuff or endeavor, whatever you're doing as like this business income or separate income. Keep all the expenses for that separate. And what I mean by that is open a dedicated business bank account straight out the gate. The second you either form an LLC or don't and just get your EIN number, once you have your employer identification number from the IRS, which it's $25, I think, right now, just go get it for your new entity, whatever rental. File for your EIN. There's an online form you can fill out. Get your EIN number and open a business bank account. Once you can put all your revenue, all your sales, anything, deposits for this rental, put in that business bank account. And same as spending. If you're buying gas or whatever, or supplies or sheets, whatever you're buying for your business, have it go through that business bank account, because then you can see everything coming in, everything going out. And this isn't going to always work straight out the gate, because your business bank account's going to have zero. And what if you don't start your rental income for like 6 months because you're doing a renovation? So things like that, it's like still keep track of your expenses. It'll eventually get taken off of the business and reduce the income you make and all of that. But keeping it in a separate bank account is rule number one. And then as far as all the expenses, track every single thing, everything. Even if it's $2 buying yourself a coffee on the way to your rental, that's meals expense. 50% meals you can deduct on your tax return.
Ooh, I did not know that one.
Yeah. Oh yeah. Meals, big deal. And I'll tell you right now, your accountant does not care. If you obviously have like $30,000 as an individual in your meals expense, we're going to question that. But coffee every day, lunch on the way to the rental, whatever, stuff like that, little bit of meals in there, it's a good tax deduction for 50% of meals. Things to watch out for on this note is mixing personal versus rental. So like, yeah, if you're getting a coffee and it's not en route to your rental or it's not business related at all, that's where you want to watch out for it. But the other thing is missing receipts. Let's say you donated to a local charity nearby, if you don't have that receipt, that will create a headache for you come tax time or come month-end close when you're trying to look at, hey, how much money did I make this month? Shoot, this doesn't match. If the IRS audits you, you have nothing to back that up. So
can I ask you a side question for this?
Yeah.
This might be bad and like everyone's probably going to shake their head, but let's say we are building a fire pit in the backyard of our personal property, our primary property. And, it involves rocks and sand and really nice lawn chairs. Could we buy that with the business card and say that it's for another property and just kind of have it shipped to our house? Or does that look sketchy?
Could you? You could. Should you? No.
Awesome.
If it's truly a business expense and it's for the rental property, 100% business expenses go on the business. If it's personal, like let's say a massage chair and you're like, ooh, I want this in my personal house, but technically it's business. So where you could actually kind of get some of this deducted is if you had a home office. So if you had a home office in your primary residence and you take that home office deduction, that massage chair can then become of your home office expenses. So can part of your utilities expense, part of your internet expense. So there are certain things in your primary residence that you could skew and kind of move around and make them business expenses. Vehicles are one of those. Is your vehicle being used for a percentage of business? Yes. Most of the time, yeah. If it's over 50% of the time as business, that's a huge point for depreciation and putting it against the business income. And what this does is reduce that rental income as far down as possible so that you don't have to pay as much tax on that income.
Gotcha. So then do you see all of this information on QuickBooks? So like when a client of yours, gives you QuickBooks access, do you see like line by line of like, all right, this is, a coffee, this is lawn chairs for one of the rentals, and go on like so on and so forth. And then you put the deductions to that. And is there any other softwares that people can use besides QuickBooks?
Yeah. So straight out the gate, if a lot of our new rentals where it's maybe their first property, or maybe they're not in short-term rentals and they're like long-term rentals, so they don't really need a giant accounting software because they pay the same amount of rent every single month and they don't have a ton of expenses every month, whereas short-term rentals have their cleaning fees and their hosting fees and their Airbnb fees and all this stuff that makes QuickBooks Online the absolute best software there is out there.
Okay.
And the one thing about QuickBooks Online is if you go through Booked, we pass down this super secret discount that we get for being a firm, an accounting firm. We get 30% off of these QuickBooks package subscriptions. So a lot of our clients hear about us passing that discount down and they're like, I don't want to pay $100 for advanced QuickBooks. We've gotten one guy down to only $30 a month and he was paying $115 a month. So just saving anywhere you can on that QuickBooks Online subscription is really important to these small business owners. But do we also get the clients that give us their little Excel spreadsheet that has all their data on each couple of properties at the end of the year? Yeah, but are they paying more for us during tax time? Yeah, because we can't just take that as is. Like QuickBooks is a full reconciliation. It ties to your bank statement. It ties to your transactions. All of that's reconciled to all the support files, your receipts. Everything is validated in QuickBooks. Whereas an Excel spreadsheet, Brittany could type in, I bought a fire pit and a bunch of gravel and used it for my personal property, but I'm just going to type that it was for this property. We can't validate any of that. So it takes more of our time during tax season. So that can get pretty expensive if you're not using a software. So depending on...
Sounds like QuickBooks is kind of where it's at. Like,
oh yeah,
especially if they go through your tax firm of like Booked. If they go through Booked, then they will even get a more of a discount for QuickBooks, because I know like we pay a lot of money on QuickBooks because I have from Porch Realty, we have our Airbnb properties, like we have a lot going on and that adds up real fast.
Just for client transparency here, Brittany and Clay are not clients of mine at all. They are not Booked related at all. And I totally understand and love that, because no one wants to know. Your accountant knows everything about you, whether you want that to be the case or not. And as best friends, typically you don't want your bestie knowing every single income point, every single expense, everything about your whole life is not the thing. So I just want to be transparent in this podcast that Brittany and Clay are not Booked clients, and we totally respect that for them.
Yeah, and we would love to be clients with them, but just like what she said, when it comes to your accounting, if Carrie came up to me and was like, what are you doing? I'd be like, oh my God, Carrie, you're not supposed to know this about me. It's not even like that we're very secretive about our finances or anything. Like Carrie and I, we love talking money to each other, our personal finances. But, accounting is very personal, very personal. So as much as I would love to be a Booked client, I'm way too close to Carrie to do that.
And that goes for our part as well. When we opened this firm, the first ones that want to hit you up are family and friends. And how sketchy does that look? All my clients are my best friends and family. You don't even want to have that any conflict of interest talking points at all. So we have every single one of our clients are naturally found and are not related to us, not friends. And that's exactly who you want in an accountant. So if you're looking for a firm, I would suggest that first. Don't go with someone you know. Don't go with someone that's Jerry and he's been doing taxes for 300 years. Jerry might not know all these new laws and these new things. So I would suggest venturing out and finding that firm that's a great fit for you. And Booked is not a great fit for every single client. We turn down certain corporations that are just too large and would take up too much of our time, because our whole focus is to help out these baby businesses and these individuals that are pursuing business ventures. So,
and that's what I love about you guys. And especially like the fact that your whole focus is the baby businesses, because I'll admit, like, we need help out here. And I know a lot of, accounting firms and tax firms, they try to go for those big dogs and then they fail because those big dogs are very complex. Whereas like small businesses, like, we need all the help too, guys. But that's kind of going back to taxes and end of the year. Like, once they get into QuickBooks, they, do all their logs and all that stuff, they're being really good about bookkeeping, like A+ for bookkeeping. Do they then like take, I guess, tax documents to their accountant, or how does that even look? Like, I know you guys do bookkeeping and taxes. Is that kind of the route to go to a firm that has both bookkeeping and taxes?
Well, let's take a little sidestep back, because a lot of these clients, they are not prime bookkeepers. They know nothing about accounting, nor do they want to. They would rather pay, like, our base package is $25 a month. I'm sorry, a lot of people will pay $25 a month to never have to think about it. And you don't have to pretend to be an accountant or a bookkeeper or whatever. If you do, though, personally want to be that involved in the business and the accounting side of things, you can have that freedom. And we do have packages where you're doing most of the stuff and we only are involved during tax planning season or year end. So we have clients on both ends of that spectrum. But let me just be clear, if you don't want to do your own bookkeeping or accounting, our packages do start at $25 a month. And for a lot of people, that $25 is a lot of value for them to just sign up and forget about it and know that it's all handled and they don't have to be overwhelmed and stressed. So
that's like 2 trips to Starbucks.
I don't know. We give a lot of value. I mean, it's a great thing. I really like that $25 a month package. And it works out for a lot of these businesses where maybe you haven't closed on the property yet, but you still need advice. So that's kind of where that fits in as well. But if you're doing monthly bookkeeping, that's the whole goal. Keep consistent, have everything monthly on a monthly basis. Can you get 3-4 months behind during your busy season? Yes, that's fine for these small businesses. If you don't need the data right away, that's completely fine. Also, speaking to the clients, maybe you're 8 months behind, maybe you're a year behind. We take on everything. So
I know some of those people.
Yeah. Don't just be like, gosh, I'm so far in the hole. No, you're not. We can help. It's all good. But getting to the point where you're on a consistent monthly bookkeeping will save you money during tax time. Because if you need my services on stuff that we could have handled when it's not busy season, you're paying a busy season premium on my time if I have to spend time on accounting and bookkeeping during year end when I should be spending time on taxes. So that rate is a lot higher, and you could save yourself a lot of money if you just sign up for a monthly bookkeeping package during the regular course of the year.
100%, 100%. So for kind of going to a different route now, like when it comes to short-term rentals, and again, like I know nothing about taxes. Like I am one of the dumbest people when it comes to tax. I just kind of go with the flow, give my stuff to my accountant. I'm like, hey, like, please save us money, please. Anywho, I know with short-term rentals, there are a lot of tax benefits, like Real Estate Pro and, furniture deduction and all that stuff. Can you kind of go through like what are the top tax benefits for short-term rentals? Because I know that there's a lot.
Yeah. It gets, and it's not cut and dry. It's not black and white. Everybody's situation is different depending on what your goals are. So if your goal is, oh my God, I don't want to pay anything in taxes, but I need to show income from it, because maybe it's your only source of income. So for debt purposes, you would want to show your net income from your real estate property as higher so that you could take out debt for the next property. So that's a whole different situation than, hey, I also work somewhere else full time. I'm also owning this on the side. That's where we would change our little tax goal here. But just not to confuse anyone, if you buy or own currently a property, if you rent it out for less than 15 days per year, so let's say you use the property a majority of the time and you only rent it out less than 15 days of the year, but you're still collecting income from those rental days, that's free money for you. According to the IRS, They don't require any reporting on that. So that's pretty cool.
And I do know that you don't need any permits or license for that if it's less
Nope.
than 15 days overall. So like if there's like a huge, let's say like Packer game, because go Pack Go, Wisconsin over here.
Yeah.
If there's like a big Packer game and you are one of the houses that's literally 2 blocks away from the stadium, you can rent it out for that weekend. You can actually rent it out for a couple weekends because we all
Yeah.
know a weekend's just 2 days. So rent it out for a couple weekends, and if it's less than, what was it, 14 or 15 days?
Less than 15
Less
days.
than 15
14
days,
is
and
the
you can just
rule,
let
but
that.
yeah. And where we see this a lot is grandma and grandpa own this mansion on the lake and we want to get married there. So grandma and grandpa book a hotel for a couple weeks and it becomes a wedding venue. So we see a lot of that where none of that is even considered like a short-term rental or anything like that. But speaking of short-term rentals, there's two ways that you can really account for them on your taxes. It's either going to be on Schedule E as a rental income or Schedule C as a business. Like, is this short-term rental a business? So short-term rentals with substantial services like cleaning during the guest stay, providing any meals, snacks,
Kind of being like a
concierge
luxury
services.
property.
Yeah, transportation. So basically, like hotels are kind of like that. Those are treated as businesses versus rentals. So
Okay.
if it's treated as a business, though, just remember that you're going to have to pay 15.3% self employment tax on that business income. So a lot of our rentals that we see, they are on Schedule E for rental income. They're not, they could be businesses. They could have EIN numbers. They usually do. They could have LLCs file for them, but a majority of their activities are like cleaning after every guest stay or trash pickup. Like all of those are just normal rental activities,
Okay.
not a business. Short-term rentals can also generate really large tax deductions, but passive activity rules also apply. So this limits like, are you active? Are you passive? It's a bunch of mumbo jumbo, but basically if you're active or a real estate professional, which I'll get to in a second, and you pass that material participation test, like you materially participate, manage, clean, book guests yourself, all of that. If you qualify for that active participant, whether it's through active participancy or the real estate pro, you can offset your W-2 income from that. So that is a huge,
Ooh.
like, secret tax loophole that a lot of real estate agents use and different property investors will use that.
And we love loopholes.
Yeah.
I know I do.
The other big one this year is depreciation. This year we had that, not to get political, but there's a new bill, if you
Yes.
haven't heard, the big, new, beautiful bill. I don't know.
Big Beautiful Bill or something like that.
Yeah, that's the name of it. But the fact of the matter is it passed, and what that did is it changed tax law. So that's all we need to know about. So what it did for bonus depreciation is huge because it really helps out these small businesses where you can deduct 100% of your purchases, even if they're like fixed asset related. So let's go over that. Furniture, beds, couches, appliances, anything over $2,500 that you used to spend, like let's say you bought, I don't know, Costco TV for $4,000, that would have had to go into your fixed asset schedule and you would have had to depreciate it. Well, what happens when you depreciate it is only a portion of it hits expense. Well, that means only a portion of it is being reducing your income. Well, this new bill that passed allows you to 100% expense it this year,
Hell yeah.
2025. So we have companies that are buying like millions, like in solar panel investments and all of this because they made so much money that they need to reduce it down. And I know our focus is like these baby businesses. Do they still make millions of dollars? Yes, usually it is a business. You're in the business of making money. Are they still considered small business? Yes.
Yeah.
I would say the tens of millions, that's where we kind of start to, okay, you're a little bit bigger than this. You probably need some audit and advisory services. So that's kind of where we draw the line on that. But bonus depreciation, ask your accountant about it. Ask about it. A lot of things can get expensed this year that don't typically through bonus depreciation. Another short-term rental tax loophole is if you meet these IRS material participation requirements. So your average rental is under 7 days. You have the hands-on management. You're the active participant. You can treat that property as a non-passive and use the depreciation to also offset your active income or your W-2 income. So it doesn't just sit as a passive income property. So that's really cool. I want to get to the real estate professional status though, because if you put in 750 hours per year actively managing your rentals, you can put those either losses, all of those losses, any expenses, like typically we can't use depreciation to put you at a loss and get you a tax refund. So once your business or your rental is at zero for the year, we can't go less than that typically. But where you could is if your rental was at zero for the year, you can move those losses onto your personal if you've got that active status. And then you do end up either getting a refund or offsetting tax that you might owe elsewhere. So that's ask your accountant about that real estate professional status or the active participant in the rental.
Now, quick question with that. For the real estate pro tax advantage, how do you measure the 750 hours? Like, can you just put it in an Excel sheet? And does driving count toward those hours?
I would say, yeah, basically any times, any time of your day, if you're driving to the rental and back or whatever it is, any of that counts. If it's business related, if it's rental related, that counts. A lot of people don't measure it super closely because a lot of them are like property managers for these rentals, and that's all they do full time. So a lot of them, they're like, this is my full-time job. Obviously, it's over 750 hours a year. But if you wanted to track it, if you have other things going on, I spent this many hours per day. That's definitely, it doesn't hurt to have that extra, I guess, detail behind it.
Yeah. And I guess a question for myself to you is that since I am a real estate agent, I'm technically a real estate pro already.
Yeah.
Right?
Yep.
Okay.
Because not only do you hit pro status in your full-time job, you also hit pro status with all the rentals as well.
Okay. That's what I was thinking too. I wanted to clarify because.
And the typical job, just so you know, like percentage wise, is like 1,800 to 2,500 hours a year. So you're looking at like way a little bit less than half of your hours a day. So like it's like, this is my all day, every day. So yeah, you're way above the 750 limit. Just really quick, other deductions while we're on it: mortgage interest, property taxes, insurance, HOA fees, utilities, internet, maintenance, cleaning, travel, mileage is a huge one. We will get to that. QuickBooks Online has an app that you can download to your phone and you can track your mileage every day. You can track every week.
I didn't know that.
Yeah. Oh, yeah. Get the QR code, scan that, add it to your phone. Yeah, because doing mileage 6 months later is a nightmare. What client did I work with? Where did I go? It's a huge deduction to do mileage.
So I use Mile IQ right now. Okay. But I'm so bad at like logging.
Do you pay for that?
Huh?
Do you pay for it?
Yeah.
Quit paying for it.
I know. Okay. So I need to go on QuickBooks. I need to get the travel thing. I think it was like $300 a year or something like that. Like, it was expensive. And I know Clay's going to have a heart attack when he knows I'm not actually like logging my drive. So I need to figure something out. Let's just say that. You are like, you're opening up my mind.
Yeah. And this is all new stuff too. I mean, QuickBooks is growing every day. This stuff, it's not like, Brittany, oh my God, what are you doing? Like, some of this stuff is so new to QuickBooks even that it's only been around for a year. So don't feel like, oh my God, what have I been doing? I'm already paying for QuickBooks. Why wouldn't I use their service? They're constantly adding new things to their services. So,
which is nice.
Mileage, though, one point on mileage is if you buy a brand new vehicle, typically your expenses for that vehicle aren't much because it's a brand new vehicle. So a lot of those miles, they'll use the mileage deduction instead of the depreciation method for vehicles. So just bring up both ways to your accountant and ask about it. Just ask. Say, hey, can you do it this way and that way, and see what works, what gives me the most benefit, kind of thing.
Perfect. And then since we're on this topic, is there any negative things to watch out for when purchasing a short-term rental? Because like everyone always talks about like the positives, like the bonus depreciation and all that good jazz, but like no one actually talks about the negative stuff.
Well, this is where I give Brittany and Clay a bunch of kudos because they are so good at keeping their rentals separate from their personal.
Yes.
Mentally, everything is like, these are two different entities. And that's the best way to think about it. Because when you start muddying the personal and the use of the short-term rental, it starts complicating taxes. So the second you start using your rental personally for like a bunch of days out of the year, not that it's bad, but you're going to pay a higher tax bill because now all of a sudden all your expenses have to be a percentage because you personally used the property a certain percent. So just know that personal use of properties does complicate your tax situation. And also your cash flow. A lot of rentals are seasonal. So if you're by a ski resort, you're going to bring in a ton of income in the winter. Well, you may not make any money at all in the summer. So you better save your dimes over the winter to pay for the expenses that you still have to pay when you're not making money. So we see that a lot where, wow, I'm making so much money for this rental. This is awesome. I'm going to go spend it or pull money out of the business and spend it personally on a fire pit and gravel for my new house. Like we see that a lot. And then come not busy season, they're like, my gosh, there's still expenses to pay. So just keep an eye that the cash flow is a roller coaster throughout the year. Just keep an eye on that. Record keeping mistakes, we see a lot of mixing personal and business expenses as we go through people's bookkeeping. And also tax misclassification is a big one. Are you active? Are you passive? And if you misclassify, there's huge penalties for that. So you want to make sure that you have a professional involved that knows exactly what you are so you don't have to pay any penalty.
Quick question with that. So like when classifying items, that is the duty of the bookkeeper, correct?
It depends. If you're signed up for an accounting package that says, yep, we're doing all of your accounting, yeah. As we go through your bank transactions, we're doing that. We're putting them into the expense categories they should be. And there's nothing to do at year end. Like there's just a couple accruals or whatever it is. There's not really much on our part because we've been keeping up with it monthly. If it's you and you're doing your bookkeeping, we have to double check everything at the end of the year. And that's where we find like, hey, you double booked payroll or you double booked this or this was a personal expense, it looks like, because I don't think your short-term rental needed a boob job. I don't know.
You know what? That'd be fun though. Just kidding. That's not going to be fun. That sounds so painful, but kind of fun.
We've seen everything before.
I love that. Okay. So, if you're doing it, you better be classifying it correctly. But obviously, if you hire it out to like, let's say booked, then they are going to be doing it the correct way the first time.
Yeah.
And then they're kind of probably going to get charged extra because they have to personally go through all of your transactions, make sure that it is classified correctly if you are doing your bookkeeping yourself.
And a lot of people, how it works is they want to get to know, they want to learn QuickBooks, but they don't know straight out the gate. So we'll give them this quick guide. Hey, here's how it's done. And then we'll go in and we'll fix a bunch of things. We'll be like, hey, next time you buy something from Menards, or hey, next time you purchase this couch. And so it's an ebb and flow. It's a growing thing. We do train a lot of our clients how to do it depending on how involved they want to be in the process.
Oh, that's really nice.
Yeah. We're doing that right now with quite a bit of contractors. So kind of fun.
Yeah, I feel like that Clay's one of those people, he loves to know the numbers of the business.
Yeah.
And he does our bookkeeping because he wants to know exactly what's going on. And also some of our cleaners, they have so much on their plate too that they just see like, okay, there was 5, not even 5, probably like 15 turns this month. Let me just charge her 15 times. But in reality, it was only 13 because 2 people canceled. but sometimes they miss that. So Clay's always like going back to like double checking the cleaning and all that stuff. So that's why he likes to do the bookkeeping himself.
Well, those are all business owner due diligence. Like your accountant does not know every single thing that's going on with your business. You as the business owner knows all of those things.
Yep.
Like, you know, hey, I bought a generator for this property this month. We don't know that unless we see it specifically. But let's say you bought 10 different things and you didn't save the receipt, and we just see $1,000 transaction. We're going to end up emailing you like, hey, what did you buy? What is this? Some of it's going to be fixed assets. Some of it's going to be fully expensed. Like, there are complicated things that go through it. Or staff. Like, let's say you hire a property manager or something. If you have an employee as part of that property, we don't know if they quit. We don't know unless you tell us. So all of the ownership, even on your tax return, you can hire a CPA firm. Every single one of these firms will make you sign a paper that says, I am the business owner. It's my duty to make sure that even though my accountant's doing everything, it's my duty that my tax return's correct. The information I gave my accountant is correct. And that's how legally these firms rarely get sued, because all that risk is on the business owner.
So another question with that is, when it comes to paying your taxes and having, all that shenanigans, it's a partnership at the end of the day. Like me and my CPA, it's a partnership. Would it be helpful if people emailed you, let's say like once a month, saying like, hey, I just bought a generator, or hey, I just hired someone, this is who they are, and kind of keep you in the loop with everything? Or is it just one of those things that like it's like end of the year or maybe tax planning or something? I don't know.
It just depends on how large you are. If you're a client where not much happens, fine. Like maybe it's not a short-term rental, it's more of a long-term rental. If you switched tenants and missed a month of rental income, something like that, that can all happen at year end if it's not a lot of activity going through. All of our accounting subscription clients, we're checking in on them on a monthly basis, if not more than that.
Oh, that's so nice.
Yeah, we do all of that. If they even have a question, maybe they're at the store buying the generator. Hey, how does this help me if I buy this in taxes? Or we had a client last year where we're like, hey, it would save you like $5,000 in taxes if you bought a $2,500 trailer right now.
Dang.
So,
yeah.
So tax planning, we're constantly checking in. We're like, hey, what if you did this? Would you want to do this? LLCs versus S corporations or holding companies. We're constantly trying to get you to be the best you can be. And that's why, you can probably start out on your own with your first short-term rental. That's fine. But getting a professional in as soon as you possibly can does make sense. And with Booked, all of those support questions or whatever, all of that's free. So it's like,
Carrie,
reach
can you
out.
not be my best friend?
I know. Can we pretend we don't know each other?
Yeah, that'd be so nice. Because like I know even like my CPA, he's saying that the best tax benefit is to purchase an Airbnb / short-term rental property, investment property every single year to kind of keep the tax benefits going. Is that actually true, or is it just kind of like, that's not true, is it?
I mean, it's not false. It's not true. It just depends on what your goals are. So like if your goal is to just scale and own the whole world and buy everything you can and be maxed out on debt, if that's your goal, that's the plan. A lot of people aren't super comfortable being in debt, and they want to start with like, let's just do one rental property, see how it goes, play it by ear. Because there is a lot of risk in this industry right now, just because, hey, Airbnb's in a lot of lawsuits. A lot of counties, towns aren't allowing them at all. And there's so many loopholes you got to jump through just to get these things approved as short-term rentals that what if in 5 years, in 1 year, in 6 months, all of a sudden you can't rent or something like that happens? Personally, could you take on all that debt with no revenue?
Yeah.
Like all your bills.
Fun fact for the state of Wisconsin is a lot of people are fighting back against the township ordinance. So like pretty much the statewide, you can rent out your property for 7 days minimum. And there's a lot of like, I know was Rib Mountain. It's very strict in that area. But someone took them to court, had the WRA on their side, and now kind of like fighting back, saying like, hey, I don't need to have this as my primary residence. I can purchase it and then rent it out. And this is happening a lot in the whole state, which is really exciting because a lot of people are thinking it's the opposite of like everyone are really cranking down. It's getting way more strict. And I mean, yes, it is. But at the end of the day, it's your property. You have the right to do whatever you want.
Yes.
And the state has a general rule that you could rent it for 7 night minimum, no matter what. So that's actually been in the works right now. And I'm seeing a lot of cases through the WRA website that are kind of like, you know, Rib Mountain versus blah, blah, blah. And I'm like, ooh, like things are changing. But
that's exactly it. Like, as you said, things are changing. They can always change. So you always just want to be prepared for any scenario, any situation. So some people are more confident using those equity methods on current houses to get more properties and scale and build this big empire out of it. And some people are just happy with their couple, maybe their couple rental properties. They're comfortable. They feel good in that. So whatever your goal is how your accountant is going to help you reach that goal. So your specific goal is to scale. And so the benefits of that is it generates more depreciation deductions. Like now look at all the properties you have where you could do the full bonus depreciations on everything this year. Like you have more of that. So having more sometimes does benefit you. You also have access to more financing options and you can build equity faster because you've got more properties. So it's not the game plan for everyone. But if that's your strategic plan, then that's where your accountant is going to lift you up and help you to reach those goals.
And it's nice that you kind of take people's goals into account too. That like, it's not just like a black and white or cookie cutter, like, hey, oh, you're a short-term rental investor. Oh, you probably want this. Like you are actually hearing people and what they want to do. And obviously based off their future, you kind of gear their bookkeeping and tax benefits through that too. So with that being said, like how much do you actually cost? I know you mentioned the $25 a month, which is 2 trips to Starbucks. Like that's stupid cheap. What are the other transparent prices?
Yeah. So we have a bunch of different packages. A lot of our short-term rental clients are on either the $25 a month package, which is pretty minimal effort on our part, like maybe a few minutes a month we're checking in. Maybe we do some month-end financials here and there. It's more for support on that side of things. Maybe we help you get set up in QuickBooks. That sort of thing is the $25 a month. But our most popular for these rental clients is the $89 a month package. And that includes all your filings as well. So all your business filings, LLC filings, your EIN, keeping all that up to date, plus your monthly accounting. So for $89 a month, we do all your monthly accounting and you never have to worry about it. So that's one of our most popular packages. That's still on the lower end. If you add employees or property managers and you're paying salaries, obviously you can go as expensive as you want. We've got obviously bigger bar and restaurant clients that have full staffs and they're paying $500 plus a month for all their accounting, all their businesses, blah, blah, blah. And that's just accounting. Our tax packages are different. Everyone has a different tax situation. Those prices are also on our website, bookedaccountingandtax.com, under tax. And yeah, it just depends on what situation you're in. See that most of our rental clients are either between the $25 package a month or the $89.
Which I love that everything is on your website because nothing is more like time is money for me. You know, like baby Melanie's now 4 months, which today was the very first day of daycare. Let's just talk about that. Oh my God.
I can't believe you haven't got a phone call yet.
No, so like the daycare, sorry everyone, side note with my bestie, they're sending me so many notifications right now of like, oh, nap time, and they like take a picture of her taking a nap. But
what do they say? Oh, bowel movement.
Yeah, it's so much fun. I'm like addicted to my phone. I'm like, ooh, what's going on? Like, oh, she just napped.
Wait, do they have the live camera feed too?
We don't. And they said because a lot of people kind of like were just staring at it.
Yeah.
And if one of the teachers, you know, like walked away from a child that's like clearly playing with the toy, like sometimes they would get a phone call and be like, nervous. What is she doing? Yeah. Like, it's just too invasive, I think.
It's hover mom.
We walked away and Melanie was so happy. Like, she was just like looking at herself in the mirror, and she was walking, or Clay and I were walking away, and I was like, Melanie, how about you just like cry? Like, how about you just act like that, like this is a big deal, and like mommy and daddy are going away. But she was so happy, and I was like, can you just like cry a little bit, like make me feel bad?
Brittany and Clay are both social butterflies, so I would expect nothing less that little Mel loves her time at daycare.
I know, and all the photos are just like her sucking on her toe and just smiling. But anywho, time is money as a new mom. And it's so, I hate like contacting someone and they say like, oh, prices are going to be discussed over a phone call. And then I call them and then they're just like, so stupid expensive, I can't even afford them. And I'm like, well, that was just a waste of, 30 to 45 minutes. So I love that all the prices are online. So it's not a waste of time. If it's not in your, budget, then right away. But if it is in your budget, I would 100% go through Booked and like use their services, because Clay spends so much time on bookkeeping. Anything else that you think Airbnb Roadmap listeners should know about?
Yeah. I mean, I love Booked because it's a business where you don't have to sell it. Like, I don't have to sell it. Hey, do you want an accountant that replies? Like, I guarantee you, Brittany, if you message your accountant right now, they're going to not respond for 3-4+ days. If it's
and
busy,
then charge me $50.
Oh yeah, you won't even hear back. And so I don't have to sell Booked. Like, there's no, either you want a responsive accountant and you want your stuff done and you want it to be affordable, or you don't. Like, it's one of those things where I'm not a salesperson, but I just love that my business gets to sell itself, which is, it's really cool. And it's more of a business of helping people. So for first time short-term rental hosts, I would say just don't stress about the numbers. You're already stressing about the furniture, the cost. Like, are we going to close on this? Do we have enough money? Are we going to get approved for the loan? Like, there's so many things to overwhelm you that I just like put it to the side. Pay us $25 a month. And we're month to month. You're not locked into a contract. Like, leave after a month. We don't care. Like, if we helped you, we helped you. And if you're onwards and upwards, there you go. Like, great. So I would just say track everything, stay organized, and then just outsource. If you need it, just outsource it. So a little planning definitely saves you a lot now.
I know that you do have a promotion going on for the Airbnb Roadmap listeners, which is really awesome, because I would love to take that up on myself. And you showed me the flyer that you're going to provide everyone. And even that flyer helps so much.
Yeah. So we did create a promo code. The promo code is Roadmap, ROADMAP. And if you text that to us at 608-492-020, or reach out on our website, bookedaccountingandtax.com. Any way you can find us, if you send us the keyword roadmap, we will offer you a free month off of a 3-month accounting subscription.
Damn.
Yeah. And then we also did, as Brittany mentioned, create a little accounting and tax for short-term rentals cheat sheet. It basically has a high-level version of this entire podcast. So if you're not here listening to this, I hope you just skip to the end to get the free promo code and just get this cheat sheet. If you can just reference that for ideas or a quick question or whatever, this cheat sheet will be really valuable to you. So promo code Roadmap for a free month off of a 3-month accounting subscription.
Yeah, and I will definitely put that in the show notes. Also, me saying damn, I totally sounded like a boy right there. I'm like, in my head while she was saying that, I was like, oh my gosh, should I edit that out? But I'm like, nah, like this is going to be a no edit podcast episode, because
we don't need any edits.
We love the bloopers, right? Yeah. But like, as I said damn, I was like, damn, that was super manly. That was awkward.
Ew.
Anywho, thank you so much for jumping on. Carrie, you are absolutely my bestie, and I love you so much. I wish I could use your services, but that would be so awkward of you knowing everything about me. Like, you already know way too much. So
I can foresee that Clay would be a little bit of a nightmare client too. Like, Clay likes to be super over involved in every aspect. So any part that I could see being outsourced, I think Clay would be like on it, which is great. We do have 100%. Clients like that. Do we make money on those clients? No, we lose money on those clients.
Yep. You would not want Clay as a client. He would be like, Carrie, what about this 1 cent? I'd be like, bro, it's 1 cent. Like, relax.
Clay can keep paying his high accounting fees for every email and phone call he has to send.
We no longer email them. I learned my lesson.
Yeah.
And that just shows that you can get really screwed on your accounting, everyone.
Yeah. A lot of people are. I mean, this is why we exist.
Exactly. You have, solved the pain point that everyone is doing right now. So I will let you go. I know that you have another appointment, but I appreciate you jumping on and telling us all things about taxes.
Thank you so much for having me, Brittany. I love being on the podcast. And if you have any other questions, just reach out.
You betcha. See you, Carrie.
Thank you. Bye.
Thanks for joining me on the Airbnb Roadmap. If you're loving these episodes and want to keep the conversation going, be sure to subscribe, leave a review, and share this podcast with someone who's ready to dive into the world of short-term rentals. Got a question or topic you would love to hear about? Reach out. This podcast is all about learning and growing together. And don't forget to follow me on Instagram, the Airbnb Roadmap Podcast, for more tips, tricks, and behind-the-scene insights. Until next time, here's to turning your short-term rental dreams into thriving realities. I'll see you back here soon.